Good morning, good afternoon, good evening, wherever you are, whenever. So you can see that the stock market has fallen recently by a lot. And is this a good news? Yes, if you have some cash and you know how to invest. So how do you pick stocks in less than 10 or 15 minutes where you can allocate maybe your first $500 or $1,000? I'm going to share with you a secret weapon that I've been using since about 2 to 3 years ago. It was created by one of my friends in Thailand. It is one of the top fintech company right now. So this is the website. It's called Jita.com. And you know what's the cool thing? Only recently they are giving all the screeners and all the data for free. So once you go to Jita.com, all you need to do is to sign up for a free account using either your Google account or Facebook account, and you get access to all these countries immediately. Let me show you how to use them. So for example, if you click on Singapore, you will come to a page like this. What happens is, immediately you get a list of Singapore stocks already sorted by the ranking. So this is the number 1 stock, number 2 stock to buy, number 3, and so on. If you have $500, what you can do is to allocate into the top 10 stocks. 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. Now, obviously, some of the stocks are a bit too expensive. Like example, UOB is $24. You have to buy at least 100. There's $200 over dollars. But you can allocate into any of the other stocks that cost lesser than $5. Okay, so you got OCBC here as well. Now, let me explain a bit how this works. They have used an algorithm using the Buffett formula, using fundamental analysis to calculate a score of the stock as well as the valuation. Can you see the dotted line? Is a valuation based on fundamental analysis, calculating how much the stock worth. And right now, for example, the number 1 stock that based on this website you should invest in is China Sunshin. It is 184% below what they call the Jita line, the valuation. It is undervalued by that much, and the score, the quality of the company is 6.65. So we want to buy a company that has high quality, at least more than 6 to 7 points. This is slightly on the low side, but let me share with you, or it's just slightly lower. Anything above 7 is considered pretty good. And how do they calculate all this? Click into the stock, they give you detailed information. So let me just click in right now. Okay, so you can see that they will tell you a bit more about the stock. It's in chemical, it's in materials. The historical score, it has been well improving, I would see. And these are the factors: growth opportunity, recent business performance, financial strength, returns, and competitive advantage. So meaning to say, this friend of mine, he took all the things that it is based on fundamentals, they create into an algorithm, into a science, and they give a score to it, which is what very good investors does. At the same time, they even give you the valuation. I was asking him, how come you're giving all this out for free? And he said that, well, why not? Because he likes to share, and he feels that, in fact, all this information, you can do it on your own, or you can come to a website to get it. So it is very generous of him, and I think it's very, very amazing. So let me just share with you on this portion. As if you want to do additional like study on this stock, you can go to the financial, okay, or you can go to this thing called fact sheet. So the financial, they will show you like for the past few years what is the income statement, balance sheet, cash flow. And if you want to go to the fact sheet, let me show you something. It is a summary of some of the important financials. So if you study stocks yourself, or if you don't, you should even start to look at it. Now let me just pick up a few points on this. Now you can see that this is the earnings per share, cash flow, earnings per share, dividends. I just want to point out something, because it is translated from Thailand. This is not really earnings per share. This is actually revenue per share, you can see. And this is the earnings per share. So most of the other information are accurate. It is there. You can have one look. You can see the debt to equity and all the things that you need to do. So let me show you one final thing before I do a screening myself. Okay, which is this thing. Okay, there's this thing called the Jita ranking returns. Now, because why am I so interested in this particular website? And why do I say that you can use this website to invest very quickly? Because you can see they have done a back testing and invested real money. If you have invested in the Jita top 10 stocks, like I mentioned to you just now, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, you can see that if you buy the top 10 stocks, this will be your returns, a 33% average gain. So you can see that if you've been buying the top 10 stocks every year, buy, and then after that the next year you hold them and then rebalance again. So every maybe 2nd of January you buy stocks, and the next 2nd of January you sell them again. You can see that this is the annualized return is 24% per year. This year, 2017, or rather in 2017, it will be 33.1%. Of course, we have not seen the 2018 score yet, but I can share with you, based on my experience, it's not that bad. You see, it is because the market has been going down, probably we'll be still making some gains. Now, this is talking about the US market. If you are interested in, let's say, the Singapore market, they are loading for you, you'll be gaining like 13.53%. So again, if you have been buying the top 10 Singapore stocks based on what we have seen just now, wow, it's 48%. I think this is in 2017. So you can see annualized about 14.13%. And the cool thing is this, you can invest in any of the, even Vietnam stocks, Hong Kong stocks, it is all there. The information is free. There's an algorithm to help you like pick stocks. So again, of course, you got to do your own due diligence, but I've seen this. That is a very useful website that we can use to invest, like do a very quick screener, and then we do our second layer study. So this is a gift from my friend, and now I'm going to re-give it to you, and I hope that you enjoy it. So go and get a Jita account. It's entirely free and it's amazing. So hope you have enjoyed yourself and start investing with a lot of confidence, with lots more confidence that this is based on something that's fundamental, and you diversify it into 10, 20 stocks. It's going to be okay. I wish you all the best, and the usual disclaimer, do your due diligence. I will be posting more ideas and more information to invest together wisely. I'll see you.